Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride.
All right, we are back with another episode of the Real Estate Investing Club. Today we have Mark McGuire with us. Mark is the founder of Hearthfire Holdings. I had said that one right, nailed it first time. Mark has a really good story, a lot of different experience, so I'm really excited to hear kind of how he got to where he is today. Mark, thanks for showing up.
Gabe, thanks for having me on, man. Excited.
Absolutely. I told you before we got on the show, we like to hear stories. So I know you got a ton of varied experience. I'm sure there's lots of ups and downs. Why don't you give us, some highlights? What were some crazy experience along the way that you had so far?
Yeah. So, my story got started in real estate back in 2012. So, people were still trying to figure out where the bottom of the market was, at least in my area, Northwest Philadelphia suburbs. And
that is perfect. That's right.
Yeah. So right. So it was one of those things. I got started in residential real estate sales, and if you took a listing, it was like you were begging people to show it, and then if they did show it, and the off chance that they did, you were even further begging them to bring you an offer. You're like, hey, look, just bring me an offer. I'll start a conversation. Anything. So got started in residential real estate sales. Had been working in residential property management, like multifamily, like C-class property management, as the assistant to the maintenance guy, not even the maintenance guy. I was like
to the property manager.
Yeah, the assistant to the maintenance guy. And so, just kind of worked my way up from the bottom, and got an understanding of construction and kind of learned a lot on the job, and started investing. I was fortunate to be able to put my head down, work, make some money, and I always lived low and invested heavy. And just started investing hard, and started getting into commercial assets, started buying up from single family condos to multifamily, and then started understanding commercial real estate and commercial debt and how that all worked, and found my way into self-storage, and it's been history since there.
The rest is history, as they say. I got to say, you are the first person who got started as a property manager on the show. That is, you'd think in real estate, you'd hear that story more often. And I'm sure it gives you like a lot of, getting into actually investing, owning your own properties. It gives you a very good foundational, knowledge and education base to work off of, because man, property managers, you guys are you're the heroes of the real estate world for sure.
I'll put it to you this way. Property management, that's like a couple steps above my pay grade. I was like the lackey to the maintenance guy who got called when the toilet got clogged. I was the guy who humped all the tools up to the third floor and then like handed in the things he needed. That's how I got started.
Nice.
Please don't give me such high praise.
You have a good appreciation for anything. Anytime shit goes wrong in your properties, you're like, I get it, man. I've been there. Don't worry about it.
I'm happy to pay somebody for it, and whatever they charge me, I know how long it should take, and as long as it's not egregious, I'll pay with a smile on my face.
I love it. So, from that property management job, what was the first deal that you did? Like, was it a syndicated deal that you were putting in as a passive investor, or did you actually buy your first
I bought
property?
my own stuff. So I was in residential real estate sales as a real estate agent.
Okay.
Realized that I didn't want to do property management, maintenance anymore. And it was like,
Understandable.
I mean, don't get me wrong. It's like the endless supply of work because tenants know how to break anything and everything. And like, if you want to actually test durability, put it in a rental unit because that will truly tell you how rough and tumble it is. But we ended up going and I ended up buying my own rental properties, like condos. I got started with condos. And condos were hard to get financed back then because there was things around what's called warrantability. And I would go in after I was working as a property maintenance professional. I use air quotes lightly. I would go and work at night after my job was up, and I would do all the maintenance and all the turnover and everything for those condos. So I bought 2 of those, and then realized like at a certain point I wanted to start buying bigger and get more cash flow, because it's good when you have a tenant in there paying your monthly nut, but when one tenant moves out, all of a sudden you go from 100% occupied to 0% occupied, and you're going into the red.
Yep. Yeah, single tenant, anything can be a little bit of a stressful experience. Even industrial. I don't have any industrial myself, but whenever I see have somebody on the podcast who's in industrial, they got that single tenant who has 100,000 square feet of warehouse space. I'm like, man, it's gotta be rough. So you got into condos. That was your first thing. You knew that that's not where you wanted to stay because you were seeing you couldn't really scale it where you were. You wanted to have a little bit more cash flow. You used a word that I like to talk about on the show, buying up. I think that's a really good strategy and mindset to take when you're getting into real estate. How did you take that first step to really, go to the next level and buy up?
Luck. I mean,
me too, man. Me too. I swear to God, it was luck.
It's luck. And, so many people, I think, overstate like what they've done, and they understate how much they've been aided and abetted by the favorable market tailwinds, which now we're going to face some headwinds with respect to interest rates and how all that's, coming into play in light of the Fed, just hiking rates, 75 basis points a couple of days ago. People who invested in real estate in 2012 and got started, and I'm one of them, by the way, we don't know what a down market really is. Like, we don't know what it's like to weather the top and then come down when you have debt already. It's one thing when you're like waiting on the sidelines to jump in, but we're talking, now it's a matter of we got debt on it. We have rent. Is the rent going to go down? Because everyone always assumes rent goes up, which it doesn't all the time. And that's asset class agnostic, by the way. It doesn't matter whether you're multifamily, it doesn't matter whether you're industrial, it doesn't matter whether you're look at office, look at retail. They just got hammered the last couple of years.
Yeah.
So it's the cream is going to rise to the top. The people that got started in 2012, 11, 10, that anything you bought looked good. And if you bet on appreciation, you still came out okay, even if you made poor assumptions.
Yep. Yeah, I always say you should never bet on appreciation or at least I don't like to bet on appreciation when I'm doing my underwriting, because that's not something that it's not tangible. It's not something that I can really guarantee. Whenever you do your underwriting, in my opinion, you should always look at the numbers that are happening today and just peg them on that, because that's something that's working.
Yep, totally agreed.
So you mentioned, you already talked about the Fed rate. I saw that yesterday. I was like, God damn, it's happening. This is real. Where I know you're in self-storage, that's your bread and butter. I am too. I love the asset class. But there's been a lot of talk about, is it going to weather this recession as well as it did the previous recessions? How is it going to look in the long run? So what is your take on, self-storage specifically, and then we can just talk about the general market. Where is real estate going in the next 1, 2, 3 years?
I think you're going to see a real stark contrast between those who innovate and want to evolve and those who just stick to their guns with respect to what's always worked.
Yeah.
So REITs have been buying. Capital has been insanely cheap. REITs are super well positioned. If you look at the balance sheets of these REITs, man, these things that they're debt to asset values like nothing, and they are poised to go on a buying spree. And what they're going to do is wait for people to get hammered. I mean, they've been buying along the way because they have such a low cost of capital. But when it gets turbulent, that's when the people who are heavy in cash come in and just annihilate market share. And I think that that's what's really going to happen. You're going to have the REITs coming in, buying the people up who are antiquated, who are, sizable. They really want certain size units, like, 40, 50,000 square feet and above is really where they want to play. But the mom and pop, the whole moniker of mom and pop and all the fragmented ownership, mom and pops aren't as unaware of things as everyone makes them out to be.
Yeah.
They're not, they know how in demand self-storage is. So this whole thing where it's like, oh yeah, I'm going to go buy a mom and pop facility. And then I'm going to come in and I'm going to, raise rents, and they're way under market rent. Like, that was like 2015, 2016. That hasn't happened in a couple of years. It's just a story people keep telling.
Yeah.
So I think you're going to have you are going to have true mom and pop people who are just tired and they're going to just cash out. And I think you're going to have other people who are going to innovate.
Yeah.
You have other people who are going to innovate and they're going to just take down, they're going to just rip rents. And then what happens is if everybody's ripping rents because the mom and pops start to go and sell, that means that you have more sophisticated ownership groups coming in and operating them at true market capabilities. You're just going to have a rise in asset values in certain markets.
Yeah, that's what I like to hear. The innovation, and especially in self-storage, I'm always curious on how, it's I like it because it's a very standard, not sexy asset class. It's just easy to run. It makes a lot
efficient.
Of sense. It's efficient.
It's efficient.
Yes. And so whenever I think about self-storage and innovation, those two words just kind of clash in my mind. So I'm like, how is somebody going to innovate self-storage? It's just so bland and so standard that it's I don't really see a lot of innovation happening there. But then, famous last words, whenever you say that, that's when somebody comes in and totally turns something upside down. So we'll see where that goes.
Yep.
So self-storage, what else, what other asset classes are you guys, is that all you do, or do you focus on other stuff?
Yeah, with Hearthfire, all we do is self-storage. I mean, that's the only thing we're in. Until there's a reason to not be in it, I don't anticipate us getting out, frankly. There's still a lot of opportunity in self-storage, and it has really performed well in both the the Great Recession and the COVID era. So it's done really well. It captures movement in the economy. Now that and that's movement up or movement down. It doesn't matter. So I'll be fascinated to see, talking a little bit off before the show, I'll be fascinated to see it, as interest rates rise and the Fed does aim to slow inflation and they make people think about borrowing money instead of just, more debt. I'll be interested to see how self-storage does. I think rates are already starting to even out, and this meteoric rise we've been on for the last 2 years is definitely not sustainable. It's already slowing.
Yep, absolutely. That's funny you mentioned that self-storage performs in both up and down. And I know we don't want to focus 100% self-storage right now, but I do have one story. You were talking about, self-storage performing well in both an up and a down market when people move for both directions. And I was having a conversation with my mom recently because she was, she knows I own a lot of self-storage, and she was worried that, people aren't going to have money. They're not going to rent their space. And I was explaining to her, when there's a down market, people downsize, and they need somewhere to put all that stuff.
They need it all the same.
Yeah, exactly. It works both directions, up and down. People always need that little bit of extra space, especially if you're talking about apartment owners.
Yep.
Or apartment livers. All right. So I took a peek at the clock. We are rounding in. Before we go to the quick question round, though, I do want to ask, what is the next step for you guys? What is the next big move that you're looking to make?
Yeah, one of the biggest moves that we're looking to make is actually development.
Oh, wow.
We've come into some really great relationships on the construction and development side of the house. And we're finding that it's becoming increasingly difficult right now, especially with respect to the cost of capital with interest rates. It's hard to make sellers. There's a gap between what sellers want and what you can prudently pay for a facility. Sellers are getting such a high price per foot and on existing, and the only real juice right now is on existing plus expansion. There's really not a whole lot of revenue to play with.
That is you're preaching to the choir here, man. It's exactly what I'm thinking. We're buying a property right now for $90 per square foot. Like absurd for, outdoor regular self-storage, much more than it should be.
Single story drive up.
Single story drive up. Yep. 90 per square foot, but it's already been permitted. It's already planned for a huge expansion. And that's the only reason that we're going to be, we're buying it for such high rate. So I love that you said that. That's what I like to hear. Construction. Do you have a specific metro that you're looking to expand or build into, or is it just wherever you find the opportunity?
Yeah, so we're in the Mid-Atlantic and the Eastern Midwest. So we have facilities in like very eastern part of Illinois, in western part of Indiana, Pennsylvania. We have one under contract right now in Delaware, and we're looking at another one in Virginia.
Cool. I love it.
Yeah.
All right. Well, that wraps it up. Thank you for sharing everything you shared so far. It is time for the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with books or any form of education. Give me two of them. One for general life wisdom and one for real estate specific.
The Almanac of Naval Ravikant. I just finished reading that. That book just destroyed me in the best way possible. That book.
That's funny.
Was amazing.
Somebody just recommended that. I just bought it on Amazon yesterday, and I'm excited to read it. It's
the crazy part. So you can't actually get the book for free. I chose to pay for it. I when someone's putting something into the world and it's doing good, like I'm making deposits in the karma bank, I guess.
Yep.
But so that's my general life book. Real estate. Man, it's been a while since can I recommend a business book?
Yeah, for sure.
A business book that really totally shook me to my core too, actually, was Profit First. That one was a big one for me, by Mike McGuire, and then Rocket Fuel. That's by Gino Wickman. I think those three books are my three most recommended books to anybody.
All right. I've heard of both Profit First and Rocket Fuel. I haven't picked them up yet. I'm going to have to do that.
Rocket Fuel for sure for you.
Rocket Fuel?
Yeah.
All right.
And it's easy to read too.
Perfect. And that leads us to the next question. This one is for your younger self. So if you could go back to the Mark who was, going around scrubbing the toilets, bringing the guys, the main property manager, the tools that he needs, go to him, look him in the eye, give him one piece of advice moving forward.
Man, that's a good question. Be patient and keep your head down. I think sometimes you want to force things too much. I mean, I'm an impatient, super type A guy, and sometimes I get frustrated with lack of progress. So sometimes it's just a matter of be patient, keep your head down, play the long game.
I like it. Patience is definitely a virtue, especially when it comes to real estate. That leads us to the next question. This one is for the United States. It's a huge place, lots of opportunity out there, lots of square miles to buy up. So if you could point to one metro that is not your backyard, what is the metro you are most excited about?
Interesting. I think the Wilmington, North Carolina MSA is super interesting. Also, like Raleigh-Durham metro, I think is also. I mean, the amount of people pouring into Raleigh-Durham into the Research Triangle is crazy.
Nice. And I think Boeing just went out there, didn't they? Some other big company just
I'm not positive. I mean, I'm not actively looking there. It's like stuff that, it's like you're kind of consuming, news and kind of looking at different things. That just seems both of those places. Carolinas just are on freaking fire.
Yeah.
They're affordable for now.
Yeah, for now. Charleston is actually my girlfriend and I's favorite city to visit. Freaking love that city. I've called brokers left and right trying to find a good self-storage to buy out there just because I want an excuse to go out to Charleston every once in a while.
You got to write it off.
Yeah, that's right. All right. That leads us to the next question. And this is tools. I use a lot of tools in my business, and I'm sure you do too. We all have our favorite tools. So what is one, software tool that you use on the daily that you feel has contributed the most to your business?
Yeah, I mean, honestly, it's my phone.
Easy.
But I mean,
Fair
if you were to
enough.
ask for, I don't know, a more specific phone, I mean, it depends on what you're going for. But if you want contact data, I think that Reonomy is probably one of the best tools you can get.
Reonomy, yep. I've been toying with getting a subscription to oh my God, what CoStar. But they are so expensive. It's just like,
yeah, Reonomy's, I don't think quite as expensive as CoStar, but Reonomy is, definitely not cheap. But from a data perspective, that's what the top commercial brokerage firms are using as their data sources, and then triangulating it all.
I love it. All right, and that leads us to the very last question. This is for the listeners. You've given us a lot of good advice. So what is the best way for somebody to reach out and get in contact with you?
Yeah, best way for someone to get in contact, investingwithmark.com, MARK. That'll take you right to our contact page with Hearthfire, and shoot me an email.
All right, investingwithmark.com. I will put that URL in the show notes. So if y'all want to reach out to Mark, just click a little more in the description. It'll pull down the full description. In there, you can find Mark's URL, or you can just remember it. It's pretty easy to remember.
Yep.
So Mark, that wraps it up. Thank you very much for hopping on. It's been a pleasure.
Absolutely, Gabe. Been a pleasure, man. Thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, as always, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.